Welcome to Stock Therapy with Penny Queen. Today I have CEO Dave Gemmett of CISO Global. Welcome back.
Thank you. Thank you for having me, Penny.
All right. Well, I am excited to get a bit of an update for retail because we've had an exciting few weeks here and there are a lot of questions floating around. So, first on my list, when are you releasing earnings?
We'll actually release Q1 May 15th. You'll see the updated financials.
Excellent. So, I would like to follow that with, are you still confident in your forward guidance?
Absolutely.
Good. That's
Overconfident.
exactly. What was that? I'm sorry.
Overconfident.
Overconfident. That's exactly what I want to hear. All right. Are you planning to extinguish the ATM?
Well, actually, we had a shareholders meeting. I thought was the board meeting when we last met. Actually, it was a shareholder meeting on site. So that was our annual meeting, and our board meeting is actually the 13th, and we are discussing that. But again, I'll reiterate with this share price, how could we actually use it? Because it would put more shares, more dilution into the marketplace. And quite frankly, we're looking to, that would soften the stock. And we want the stock to actually be stronger and have a base. So the ATM is not worth using. And it's completely irrelevant to where we're at today.
Yeah, and it expires on its own in June, right?
That's correct. It just
Yeah.
goes away.
I know it's just one of those last shreds of doubt that some people can cling on to, you know. So, all right, are there any corporate governance plans to change the QSIP and fight some of this naked shorting?
Interesting enough, yes, that's one of the things on our board agenda, which typically it's a board meeting. We have several things we're going over: the ATM, changing the QSIP, and it's a process to change the QSIP. You have to go out, you got to get everybody's shares in, they have to present them. That actually eliminates the people who are short selling or naked short selling, and so now we have everybody, but it takes a mailing, it takes 30 days, and it takes board's authorization, which we're looking to accomplish on May 13th.
Okay, perfect. All right, I have two separate but related questions. One, could the company do a share buyback? And why aren't we seeing insider buying?
Number one, people are familiar with blackouts. And because we are moving so fast and we're signing some large deals, the insiders can't buy because we're in a blackout period. And so we would love to buy the stock at this price. We are trying to get into position because I will be candid, UBS handles all of the stock for the company and employees and shares. Unfortunately, you have to file documentation that you're going to do it, and you have to do it within a really short window of a blackout. And we just haven't had that opportunity yet. And so as soon as we do, we'll do that. In fact, a lot of the board has already requested to do it. We just have to do it in the time frame we're legally able to.
Yeah, I love the saying that there's, a thousand reasons to buy a stock and there's only one to sell it. I would like to bring up that you all haven't sold a share. So
That's because, a lot of people encouraged me when we were at $15 a share, sell your shares. And quite frankly, all the executives and the board and everyone who has shares truly believe that the company has a future and will continue to grow. And we didn't expect the shares to go down. I don't regret it because we wanted to show confidence in our shareholder base that, hey, we're not going to sell it because we believe in the company. This is a long-term, long hold. And quite frankly, as the largest shareholder, we're still holding and we will continue to hold. So we would encourage everybody who does buy stock, believe in the company, believe in the executive team and the vision. Cyber's not going away. And we got a great team and we keep growing. So we have a great future.
yeah, and I think I'd like to add to that. I know that there's a lot of other retail shareholders out there that get frustrated, right? We see a lot of news flow. I think we had a lot of news flow from the company before most retail investors really had a solid understanding of what was going on. And there's this like sense of excitement. And you all are big shareholders. I kind of want to remind people over and over again that, hey, the way you're feeling right now, I imagine the directors, the insiders are feeling that tenfold. So
I can tell you at the board meeting, Andy McCain's on our board, myself, Stephen, everybody who is major shareholders or shareholders in the company, no one's more frustrated than we are. We literally have grown this company from zero in 2019 where it is today is one of the 25th named cybersecurity company in the world. And here we are sitting where we're at. And what's the company worth? Well, why is it worth that? And so who really gets hurt? The shareholders. And that includes we don't have we have very little institution. I think it's down to 1.1%. The rest is retail. So when it goes up and all of a sudden artificially goes down, or does it because of the market, those are the shareholders who get hurt, are the ones who buy it on the way up. But I will tell you, there's no one more frustrated than our team. And we share that. We take phone calls. And all we can say is, we believe in the company, we're doing the right things, and we're moving forward as an organization.
Well, I like to hear that your people and my people are aligned. So, all right. There's been a lot of changes over the past month and a half, and all of the online sites aren't really keeping up. So can you just clarify for us what that outstanding share count is?
I believe it's 30,888,000.
Okay. And then that's
that was due to the note we took to pay off the expensive debt, and it was so it converted. It's all done now. There's nothing that's going to put pressure on the stock, hopefully as it goes up. So it's out there. It's a good float. We actually have, volume, which is good, which is a sign of hopefully going up. And yeah, we're not going to put pressure on the stock. There's no reason for anyone to sell. No one plans on selling.
okay. Perfect. I saw that you were nominated for the Ernst Young Entrepreneur of the Year.
For Pacific Southwest, yeah, it was. I was actually nominated by 3 people here in town, which really was shocking and humbling. And so, a plug for Vaco is my sponsor. I've known him for some time. So it was actually a shock when I got invited, and I passed. And now I'm a finalist and going to enjoy my time with those folks in Torrey Pines. But yeah, it was humbling and a shock at the same time.
Well, that's exciting news. And I think it also points to a lot of the legitimacy of the company and what you're doing. Right. So I was happy to see that. Let's talk about CheckLight and CyberSimple.
CheckLight is so the insurance companies, most people in the world, we get down in the weeds with our lives, but there's certain industries like health insurance and insurance itself and car insurance. Well, cyber insurance has become almost toxic. A lot of big carriers have stopped carrying it. And so they want to make a way or figure out a way that people can get their insurance, but their insurance companies, they don't have ways to protect their clients or understand their cyber posture. So with CheckLight, we're able to monitor their clients. And so they're offering, carriers and brokers are offering our product as a warranty. And there'll be an announcement hopefully this week to update that. But we have a large carrier who's already carrying it and offering it to their clients. And you go to sign up for cyber insurance, you're mandated to click that and get CheckLight. So it's one of the software pieces that we have that's generating significant interest and a revenue stream.
Yeah, I could not be more excited about software sales for CISO. That's, so to my understanding, so I'm a small business. I've got this running 24/7. And is it really as simple as like a green light to tell me that I'm protected, or?
We'll give you a demo.
Okay, I would like a demo. I'd like to understand a little bit better. I mean, I definitely get the need for cybersecurity and also the complexity of it, and how, a lot of businesses, they're, 4 or 5 employees, they can't have a full-time IT person, and that IT person can't be 24 hours a day. And I know a lot of different types of protection that people buy are really just cobbled together, and they don't know where the holes are.
You
So,
you nailed it. It's cobbled together, and believe it or not, all the way up to Fortune 50 companies,
oh,
they have 40 or 50 different vendors that cobble together, and they're not working together, right?
mm,
They don't work congruently, because you get a vendor selling a firewall and you get a vendor selling XDR or MDR, and they don't make them work together. So CheckLight is a way for the clients or people who use the insurance groups or some of our other clients. You have to do these certain things and have this program on your computer, and you'll get these nice green lights. If one of them goes out and it's red, you've got to fix it or have us fix it for you. So as long as those are on there, that $250,000 warranty covers your breach or covers your problem.
and can we talk for just a second on the difference between insurance and warranty? Because I think that's something special that's actually built into this, if I'm reading it right.
Yeah, the warranty is typically you have an insurance policy, you have to pay up to a certain amount of money, whatever your deductible is. So this covers you because literally, if there's a major breach in the company, just to start out, some of the larger organizations, worldwide organizations, they have you write a 500,000 check immediately before your insurance even gets involved because of what takes place. What we're doing is eliminating that and protecting you and being proactive to keep those threats away from endpoints, your computers.
Well, that's fun because your answer is actually not something I'd ever even thought of. I wasn't thinking deductibles. I was just thinking that insurance requires underwriting and a license to sell. And I was thinking about how smooth the sales channels could be for this product.
Yeah, it's one too many. I mean, one insurance carrier has thousands of brokers. So it's a great opportunity. We're there. They see the value. They tested it. They trialed it. We had beta customers and it worked seamlessly for them. And so they've adopted it in several organizations to roll that out with their programs. And most people don't know the carriers have stopped selling cyber insurance because it was so expensive. They were paying out their deductible or their premiums they were gathering. Even after the deductible, they were paying sometimes up to 1,600 times more than they were actually getting from their clients. So a lot of them have shut cybersecurity insurance down. They don't offer it anymore.
Yeah, I mean, you hear about all of these breaches, and if somebody's insured, nobody knows that they're doing the right things to keep themselves safe, right? I mean, that's a huge risk for the insurance companies. I mean, that's how do you mitigate that risk? You mitigate it with something like CheckLight, where you know what's going on. I'm a huge fan. I want my demo. I want my
We'll do that for you. Uh,
okay.
it gives comfort to the folks and also the insurance companies, and even the larger ones. The insurance carriers have asked us and some of the brokers to go in if there's a concern with that, to make sure their cyber posture is 1 to 10, 10 being the safest, 1 being terrible. And they want to make sure that their premium, if they're spending it, that actually they're not going to have to pay out premiums. So the insurance become, after losing that much money over the last couple of years and stop offering it, they're very wary of actually giving people cyber insurance.
Yeah, well, I can understand. And I mean, tell me if I'm right, but cyber insurance is going to be more and more important moving forward for things like mergers and acquisitions. And
Here, you hit a key component, and we haven't talked about this, but some of our clients are PE firms and legal law firms, and what's interesting is when I can give an example. A large Fortune 500 company a firm, a legal firm, had done all their legal opinions. They had SOX, they were buying another organization, and the compliance security attorney called me and said, "Can you talk to the CEO?" And I go, "I don't know who it is." Go, "No, just talk to them. They haven't given us the compliance. They haven't given us any kind of coverage on their cyber posture. And this is a pretty quick acquisition, and it was over 100 million in acquisition." Yeah. And so he said, "Okay." So I talked to the CEO. He's like, "Who are you?" So I explained to him, tail coverage will not cover if you do not look. And a lot of people, maybe as retail, don't understand tail coverage. There are exceptions. So you put that in the profile. You say, okay, these are the things that we're not going to cover. You're responsible for the seller. We're not going to be responsible. And so we went in and found some very interesting things and found that 1.8 million of their people were on the dark net with all their information. Now think of that large organization buying them, and then essentially it comes out that 1.8 million people were out there on the dark net with all the information in healthcare. It's a healthcare client. 1.8 million. How much would that damage your reputation of a Fortune 500 company and the confidence they would have? So in the next 2 to 3 years, and hopefully it's actually sooner, you'll have to have your legal opinion. You'll have to have your accounting firm, the SOX, you have to get all these certifications, make sure they're in compliance, but they will start requiring cyber. Think of what happened to Marriott. Marriott bought Starwood. Nobody really knows this, but Starwood had hackers in their systems for 5 years. Some engineer at Marriott said, okay, we're integrating the systems, and plug the two together.
Ooh.
That became a freeway for the hackers and said, oh boy, boom. And so they got into the rewards program, all because of an acquisition and someone didn't check to see if they were secure. So it's going to happen. They're going to have to figure that out.
Wow, that's funny. I love special situation stocks and distressed assets, and when I watch all these mergers and acquisitions that are supposed to take place and like trying to figure out the odds on them going through, there's a lot that goes into it that we don't get to see on the surface. So I'm excited for this to be integrated, not just because I'd like more of my data protected as it goes from one company to another, but this is a really, really large growing market, right? Was it 50 billion by 2030?
Mm-hmm.
Right? I mean, that's a big market, and there are not enough companies in it at this point. Like bottom line. So, all right. Well, sales going well in that area.
I will tell you word of mouth, and we're going after those specialized. They're starting to realize. To give you a perfect example, a PE firm that we had represented in a previous one had a large data center worldwide, and they were buying an asset, and the new CEO said, "Hey, I need to check and see if this asset is worth it." We came back and went, "You're not buying that data center. It's completely, infiltrated." And so they walked away from it. If they would have connected their networks, that would have been a huge issue.
Yeah. And well, I'm excited for word to spread and revenue to increase. All right, it is super clear that the stock is still being punished. When you look, huge volume, not a lot of price movement on massive volume, and the lot size is still showing as one, meaning the average transaction is one share or a fractional share. I'm wondering if you've looked at any other stocks, like have you seen what's happened with DJT stock?
I have. And what's interesting is Devin Nunes is the CEO of Trump Media. There's definitely an anomaly in their stock because it dropped so quickly and the shorts were so high, right? And they had to look at Nobu and SPR reports. And for those who don't know, in retail, you get to see who's trading the stock outside of the people in the transfer agent. And they noticed there was a discrepancy between the stock that was out there and the actual DTCC and their transfer agent. So you're welcome to share it, but President Trump wrote a letter to the head of the SEC saying there's manipulation in stock and needs to stop. And so I'd love to have an ego and say, hey, it's just us because we fight the bad guys. And if people read the article, hackers were reading the SEC and regulators' emails. There's fraudulent transactions from hackers. The issue is it's just not us, and it's just not US. It's worldwide. And the problem is there's hundreds of companies that this is happening to. We're not the only ones. If they can pick on the President Trump's company, yeah, they can pick on just about anybody.
Yeah, that's a bold move. I'm going to go ahead and take that letter. I've got a copy of it, and I'm going to put it in the description of this video. So if anybody wants to take a look at it, they can. Well, let's talk about price and fairness. I know as the CEO, you can't talk about valuation or what it should be. I certainly can. And I think I've been pretty loud about my opinions, but let's just talk about the actual facts. All right. Your trailing 12-month revenue, 34 million. EBITDA, 6 million. Year-over-year growth, 20%. Your public market cap, say 50 cents at 30 million shares, $15 million company. So your SaaS platform has been valued independently, third-party assessment at $50 million. So pretty easy to see that these numbers aren't adding up, right? I know that in this industry, typical multiples are 8x to 12x, and you're sitting somewhere around 0.3x.
That's pretty accurate. You've done your homework. So I'm glad you put those numbers out, but you're pretty dead on. In the private sector, that's the multiples that are being people are being bought and sold for those multiples. Yes.
Well, I think also having proprietary software. I think that's important because there are a lot of companies that are in cyber in one shape or another, and it can mean a lot of different things, but that you actually have software, that you're not just, you're responding to incidents, you're doing a lot in the industry, but you figured out where the growth is going to be, and you've created a product that is perfectly tailored to that. I'd like to see the market reward that. I mean,
so would we.
I know we both would. So tell me about operations now and how they've been changing. Are you streamlining things, or?
We were pretty quiet last year, especially streamlining, and we basically made the decision. Wall Street said grow as fast as you can. So we did a lot of acquisitions. We got the software in the acquisitions. We streamlined the organization and really put the books to get profitable. That was our number one goal. And as far as streamline goes, we're right sized, and we actually now have a great group who is concentrating on bringing margins up. So I'd say just read Q1. The margins will continue to go up. Software actually is an 80% margin. And we see those sales, the faster we sell, the higher the margin goes. But like other companies, they outsource their software to third-party companies to install. We're lucky enough to have the professionals to install it at the same time. So again, the company was 3 phases: get the talent, build the software, and now distribute the software. And so looking forward, those margins are increasing because of the software and the software sales.
I want to see increased revenue, increased margins, increased share price. I think we're still aligned. So I am very excited for everything that's going to happen over the next 6 months here. The way I see things as, you came out of a very dark period. You were very quiet. There were a lot of acquisitions, a lot of things to put together, and it looks like you just had your nose down and were working. And I'm excited for the news flow and being able to see, this revenue that you're talking about, being able to actually see it happening. And mostly because I like to be right. I also like money, but mostly I like to be correct. And it seems very clear to me, but there's still people out there with their doubts, and I can't wait for them to run out of doubt. So,
Well, we're solving that, and this year, it's a great year. I mean, obviously, we have some very seasoned executives, seasoned folks. I mean, after tenure of the people that we work with have been in the industry 12 years at average. Some have been 20 years. So they know their job well. And again, we have 93% of retention of our clients with 75%
huge.
reoccurring revenue. That's a testament to the people who work in this organization. We don't treat them as clients or customers. When we get in, they're our partners, and we want to be partners for life. And it really shows. And we're a public company, so we have to report it. We're not private and, yay, we're doing this or we're going to do this. When we say we do something, we have to accomplish it. Otherwise, we should get punished. But we've done what we said we're going to do. And I appreciate you recognizing we were in a dark spot, and we've cleaned that up. We've got a stronger balance sheet, and it's attributed to all the talent in this organization.
Excellent. Well, I'm just really excited for the market to catch up. And thank you again for meeting with me. And I'm sure everybody else out there is really going to love to get another update. So thank you.
Thank you. Thank you for being a shareholder, and everybody who's listening to this, thank you for being a shareholder and helping us get through this.
Perfect.